know it costs you in time.
Hello and welcome to episode 20 of BuiltPlace's Housing Conversations. Today I'm delighted to be joined by Peter Williams and we're going to be talking about affordable home ownership. Good morning, Peter.
Good morning.
And we've just had the latest affordable housing numbers from MHCLG this morning for the 2019-20 financial year, and as I described them on Twitter, they were somewhat underwhelming, actually pretty similar to last year's numbers across the board, but I suppose that's no real surprise given the headline supply numbers, which were pretty similar to the year before as well. And obviously that's all very backward looking. There's been an awful lot of change since March, which is the point at which the data ended. But government is very, very interested in home ownership and affordable home ownership in particular. And so brilliantly, you and Christine Whitehead have written a report that you can tell us everything about it.
That's very kind. Yes, we've put this report out. It's been in the process of over the last year, basically, and COVID has interrupted doing it. And it's now available on both the BSA, the Building Society Association, and the University of Glasgow website. So we're giving the link, I think, when we turn to the script, as it were. But yep. Yes, and clearly there's a context to all this, but perhaps we'll go on to discuss that.
I was at the beginning rather than the end. There's always one little thing. So here we go. At the beginning, starting points. So
starting point, yes. Well, I mean, I think Neal, as you rightly are touching upon, affordable housing supply numbers aren't strikingly wonderful, and of course that's put in the context of the government, or the Prime Minister at least, making his promises to expand home ownership by 2 million, and of course that does bring into mind all of the recent constraints on home ownership that have been building over the last while. And I guess we would highlight the squeeze on incomes that's obviously been present over the last decade, particularly for younger households, the restricted access to mortgages via affordability and stress tests, which I think in our view and other people's views have been very significant. And of course, post-COVID, the retreat from the 95% LTV market. So all of those things push, if you like, a focus onto affordable home ownership even more strongly.
Yes, and clearly some big challenges for first-time buyers this year.
Yes.
And so in that context, clearly more affordable, non-open market options for young people to get on to buy their first home are increasingly important, although not necessarily reflected in increasing numbers.
No, and I think what we try to do in the report is look back. We've looked back over quite a long period in terms of chronologies of both the market and government schemes. I mean, the litany of schemes that have been put forward by the government, mainly name changes, but sometimes content as well, seems to have a close relationship to the arrival of new ministers. And as we know in housing, new ministers are rather like the proverbial bus. There's another one along in a minute. And what we see when we look back at the history of affordable home ownership is government schemes have tended to dominate. Market schemes have been somewhat laggardly, although perhaps, and we'll come to this, I'm sure, that might change.
So in just a bit of the context, clearly you're on top of the mortgage market and the numbers there. Do you want to just run through what we've actually been seeing in terms of activity?
Yes, I mean, what we do in the report, and I mean, the data is slightly problematic in all of these things because you get the affordable housing stats from government, you get a variety of bits of data from UK finance, and of course, one of the issues here is about how you classify Help to Buy, for example, which government sees as a market scheme, not an affordable home ownership scheme, although that varies across the UK. But the UK finance data just points up the fact that shared equity loans or loans made against Help to Buy dominated in 2019. Right to Buy is clearly significant still. And in historical terms, Right to Buy has been the most significant affordable home ownership initiative. Shared ownership lags Help to Buy, and in our view is still lagging further than it should. It should be a much more active product than it is, and we'll come back to that. So I think shared Help to Buy dominates I'm going to put them in the affordable home ownership category, dominates the affordable home ownership market. We know it's not as well targeted as it might be. That will be improved, but that has been the main thing. But of course, alongside that, you've also got all the high LTV lending. And if you like, that probably runs at around 100,000 loans a year, over 90% plus. It's obviously fluctuated over time. We had the big retreat from high LTV early in the COVID pandemic. Lenders have jumped in and out, managing their books rather in recent months. But underneath all this, affordable home ownership in some senses, what's the main instrument that's been used over the decades? And beyond the Right to Buy, of course, it's high LTV loans.
Yes, and the data's not particularly public, but certainly if you look at the proportion done at very high LTVs, 90-95% plus, actually a far greater proportion of the market was in those LTVs back in the 1980s than even in 2005, 6, 7. Yes.
I mean, at peak, it got just in 2005, 6, 95 plus, I think, was at 15%. You might argue that was toppy, but the fact it then dropped down to sort of 1 and 2% gives you a sense of the gap that opened up. And I mean, I joined the housing market on the basis of 100% mortgage from a local authority. And of course, we forget that local authorities were a very important starting point for many people's housing journeys.
Yeah.
So yes, and I mean, what we'd hoped, I think, when we looked back over this is that private schemes would come forward. We've obviously had things like shared appreciation mortgages, which the Bank of Scotland issued and Barclays issued in the 80s and 90s. Not a great success story. We've had a variety of schemes on the market today. There have been a variety of schemes out there. None of them achieve scale, really, beyond the standard mortgage lending. But we are, I think, on the cusp of, in 21, this is all subject to timings because, if there's a housing market downturn, I don't think we can expect many private market initiative launches. But we are on the cusp, I think, of seeing a top-up loan emerging, backed by lenders, and of course the scheme that the builders are creating as a replacement for Help to Buy. And both of those, I think, could be very significant interventions in the market in 21, subject to market conditions. But there's still a big gap. I mean, you can argue about how big the affordability gap is. I mean, various estimates of, 1 to 3 million households who've not entered home ownership you might have reasonably expected to have entered. And they've not entered because of the things we've outlined, collapsing incomes, regulatory constraints, etc. But that's the challenge for government in some senses in terms of trying to meet the gap. And perhaps if they flesh out the Prime Minister's 2 million ambition, we'll hear more about that.
That would be nice.
Yes, indeed. And I think clearly there, the government is still putting quite a lot of weight on the idea of opening up a long-term fixed rate mortgage market. I think many of us, and I'm drawing you into this debate, many of us might question how big the cohort that will opt for long-term fixed rate mortgages when you face early repayment charges on exit, or indeed when you can opt into short-term rates, fixed rates at lower prices. Why would people, in an environment where we're told it'll be lower interest rates for longer, why would you opt for a long-term option?
Yeah, there's a fairly basic disconnect between the government's talk around a housing ladder and then long-term fixed rate mortgages, and one doesn't work with the other. And we'll maybe talk about the housing ladder in a bit, and how likely it is to work, but it suggests moving multiple times over your housing lifetime, when actually long-term fixed rate is much less likely to enable that. And there's all the usual questions that you can also put on Help to Buy in terms of, how additional actually is it, and is it just helping bring forward people who are on the cusp of buying anyway? Because it's quite clear, given the massive unaffordability of house prices relative to incomes at the moment, that you would need some pretty extreme lending criteria to really get into the bulk of people who are unable to access home ownership because of their income and wealth levels.
And this fits in with the levelling up agenda, that clearly what we've got is not only younger people, but younger people on lower incomes increasingly being excluded from home ownership. And that does not play to the levelling up agenda. And I think both industry and government really have to think about how you make access to home ownership a more widespread ability, rather than the sort of schemes that probably favour middle and higher income households over people with lower incomes.
Yeah. The focus today is on affordable home ownership, so I won't go on about it too much, but it's probably worth saying that home ownership, we're focusing on home ownership, and it's the political priority, and surveys continuously show that that's what people want, understandably, given all the benefits in this country. But it doesn't diminish the need to improve the private rented sector and the quality and security, but we're not going to debate that today, because we could go on for a long time.
And I mean, Help to Buy, I think people are now accepting, although I noticed looking at written answers in Parliament, MPs are still asking the question whether the government's going to extend the Help to Buy scheme. I think all the evidence is there. No, it isn't. First Homes is emerging, but it's very unclear to me, and it may be clearer to you, but it's very unclear to me what First Homes will achieve in terms of scale. And we really are, the cupboard is relatively bare in terms of what is there right now to boost. Rent to Buy has been very small numbers. It's almost, you ask the question why it exists. It hasn't really taken off in any scale. There's a long litany of government initiatives on affordable home ownership, which have never really gathered market traction. Rent to Mortgage is an earlier one. I think they did 300 and they pulled it. Rent to Buy is running at about 100 a year. Is it worth it? It doesn't really work for most people. Question: will First Homes really replace Help to Buy, and indeed give the boost to gather government towards its 2 million objective? I'm very unclear about that.
I suspect not, and I think there has been quite a lot of commentary around the idea that it's a gap for shared ownership to move into.
Yes. Well, let's go on to shared ownership, because I think it's striking that shared ownership, there has been a lot of renewed debate, not least, of course, in the context of the cladding issues and leasehold reform issues, and a recent ombudsman report which highlighted some of the weaknesses in the performance of shared ownership providers. That's been a product that's been around since 1980, but its market penetration is still remarkably weak. And in the report, we pick up the fact, in a Building Society Association survey, still huge numbers of people don't even know what shared ownership is and what its role is. So even though it's been around for 40 years, its penetration in terms of the consciousness of the population and access to it, to home ownership through it, is still remarkably low, which does. One of the problems, and I think one of the strengths of Help to Buy was, if you like, a market product accessed through the market. Shared ownership, by and large, in a sense, is accessed via a housing association. How many people even know where to go to a housing association to log into that? They wouldn't naturally think of that as a route to home ownership, and yet that is the route.
Yeah, and from a statistical perspective as well, it's almost a rounding error in many of the data sets we look at. It's very difficult to actually get into detail as to how it actually works. And our interest, you and I, would say one of the problems with shared ownership is a complete void when it comes to data on its performance and numbers. I mean, that 200,000, along with the 200,000 that exist,
Presumably, let's imagine, another 200,000 that have been staircased out to full ownership that are out there in the market. But of course, staircasing out means that the low-cost access point is lost immediately, because it's then a normal market products transacting like any house or home on the market. Whereas obviously, if we're only getting the subsidy benefit for that first entrant, we're not really stretching it out. I know there's the capital receipt that then is fed back through the housing association coffers to then cross-subsidize more activity. We shouldn't neglect that. But the numbers and trying to work out the metrics of all this, whether it be performance, the flow through, etc., are remarkably weak for something that's been around so long.
Yeah. And that's not the only weakness that has come to the fore.
No, and I mean one of the problems is the model which was set up at the outset by John Stanley, who was the housing minister in 1980. I remember him well. His idea was that you put 100% repairing obligation cost onto the resident who's buying, regardless of how big a share they're buying, as that was going to act as an incentive to staircase to 100%, so that what repairs you did were your benefit rather than the benefit of the housing association that owned most of the property. Of course, over time, that staircasing ladder, the climb up the rung, has tended to atrophy. There's still staircasing going on, but actually what a lot of people are doing is they're entering into permanent partial rent, partial ownership. And the question is whether that was ever intended, whether that's a desirable state to be in. When you're facing 100% repairing obligation, even though you're maintaining the asset mainly owned by a housing association. The government has made some proposals to slightly erode that, or not going too far. There's an issue about the 125-year lease that they're typically issued on, that now people are starting to they're starting to butt up against the lease lengths being too short to get mortgages against.
And that's what, 80, 90 years?
Yes, that's right. So, the model that people had in their mind when they initiated is creaking. And I think it's time, really, that there was more serious thought given to how home ownership can be improved. Now, the sector has been in discussions about improving it, but actually can't agree on a way forward, and therefore that tends to sit aside. They've got a lot of interest in maintaining the status quo, I suppose. The government's proposals on 10% shares, a good idea, but of course it does have implications about whether those, if you bought at 10%, can you ever get to 100%? You can buy additional shares at 1%, but again, the management costs, the process costs of that, are they going to be too high? They're going to push the first 10-year repairing obligation onto the housing association, which I'm guessing, Neal, will be largely, given their new build, will be largely covered by the new homes guarantee that's sitting on that property anyway. So there's some sensible thoughts there by government, but we're not quite sure really whether that will work. So I think what we're finding is that, again, the data doesn't help us, but what we're finding is there is considerable buyer, shared owner dissatisfaction building in the sector. And indeed, if you saw the Panorama program last week on shared ownership, you had the NHF, the National Housing Federation, defending shared ownership as a success on the basis that 60% of those surveyed were satisfied. Well, a satisfaction rate at 60%, I don't think is a particularly great achievement. That does suggest something is quite wrong there. So in our report, we certainly argue for, though we don't set out the detail, of the need for root and branch reform of shared ownership with a much better balance between the provider interest and the purchaser interest, and much better data on market performance, so that analysts like you and I can track what's happening in that market better, and if you like, offer critical but constructive commentary on how it might proceed.
Yeah, I think that's quite an important point, because one of the other things that came out of the Panorama report was the kind of actually where did the liability lie in terms of who was advising the buyers, the purchasers when they were going in. Was it the housing association? Was it their solicitors? Where in the process was that advice? And clearly you're dealing with people whose choices within a market are already constrained. Yes. And with limited information and people on their side, the need for, I would say this obviously, but the need for more data is clearly essential in order to improve the transparency and help a greater understanding of, for everyone involved in the market, but especially new purchasers coming in.
Yes, and indeed going on, because purchasers are paying both a rent payment and a mortgage payment. There've been many occasions in the past where the rent payment and the percentage charged for the rent is much higher than the equivalent mortgage cost. If you'd been sitting down in an annual review type structure, you advising me as the shared owner might say, Peter, you should buy more and pay less rent. But there's nobody actually policing that territory. That's left in abeyance, with people just sticking on their current arrangements without necessarily reflecting on whether actually good financial advice would be to say, your income looks sufficiently secure now that you could actually buy more. And that process isn't undertaken in any systematic way. It should be.
Yeah.
We do it in other products. Why don't we do it in shared ownership? Absolutely. So I think there are lots of things really where the sector could do more. And an example would be in the private sector. You often, and builders do this, you often see them discounting to attract people to buy more, as it were. Again, it has a consequence, clearly, but it would be possible, and individual associations have looked at this, for people to consider discounting over time so that you incentivize, subject to good financial advice and guidance, you incentivize people to buy more so that, if you like, the permanent part rent owners, as far as possible, and there will be some who want to be permanent part rent owners, but others can move on so that you actually get the turnover that you might have had in previous years. It just feels like, to us, a neglected garden, really, where the status quo has dominated without proper thought, really, for the consumer perspective.
Yeah. And so, there are now, as we've got here on the slides, there's current reforms around the staircasing, and you mentioned the share of it's no longer the 100% share of costs in the first 10 years. And we've mentioned first homes, of which there's still a great deal of uncertainty around exactly what will work there. And I think probably the single thing that we're most clear about is that they're definitely not a replacement to the scale of Help to Buy equity loan at the moment. So there's going to be a gap in the market.
And indeed, of course, put together first homes and the reforms to planning permissions and Section 106, that could actually shrink the flow of shared ownership homes coming forward from housing associations, so that gap may potentially widen again, because actually the knock-on effects of these other schemes will be to erode housing association opportunities to create more shared ownership. So I think there's a slight problem here that the housing association provision may not be as strong in the future as it has been. We certainly do have a big private investor appetite to support the growth of a shared ownership market. You look at Legal & General and others, there's a real appetite, I think, there to a shared ownership. If you want to get equity, if you like, into affordable home ownership, and there is an appetite to do that, shared ownership is the way that a lot of them see as a potential route at the moment. Obviously, other products are coming forward that may be able to help that opportunity as well. So I think We need to look at shared ownership and its capacity to draw in more private finance, but at the same time to be a successful consumer product. But I think certainly with Help to Buy going in 2023, first homes unknown, and shared ownership underperforming, the gap, Mr. Johnson's 2 million or more, could widen. And so we're left with the question mark, I think, is will these new market schemes, the top-up loan scheme, market mortgage, the Nautilus Help to Buy replacement, could they help revive the high LTV market? Most of that is still focused, or certainly the Nautilus scheme is focused on new build. Market mortgage will be on existing. And I think one of the issues here is that much of these products have tended to focus on the new build market rather than the existing market. We have to think about how we can get more volume there. And I think key to that is reviving the high LTV market with or without government guarantees. I think government in the past has played quite a strong role in helping revive the high LTV market. There's an opportunity if the high LTV market isn't coming back as strongly as it might, given it was the key supporter to genuine affordable home ownership. That's a policy concern, I think, and a market concern.
Yeah, and clearly it would be coming back from an even tougher time now than it would have been if we were having this discussion a year ago.
Yes.
And I suppose one opportunity, and we were having a bit of a discussion before we came live, is what happens next year. And I still remain firmly of the opinion that I have no idea, and I don't think anyone does. I could make an argument for why there could be a house price boom next year. Kind of continuation of the current circumstances. Equally, the OBR forecast of a crash next year, delayed from this year. You could, the argument can be just as easily made, and with everything in between. And that said, the positives are beginning to creep up with the potential of a vaccine. And is it possible that maybe if the vaccine comes through and it starts to have an impact, we can go back to some kind of normal, whatever that is? Is that maybe the point at which the government comes into the market and goes down the guarantee route to try and bring back the 95% market?
Yes, it's a really, Harold Macmillan's events, Du Bois events. The way everything's come together to stymie some of these market developments and some of the optimism around the housing market, clearly one senses the OBR forecast is the most pessimistic end, probably with capital economics, the most pessimistic end of the view of the 21 market. And I mean, it's hard to imagine, isn't it, Neal, that the momentum that's currently there will suddenly dissipate before the stamp duty holiday ends. Now, and again, of course, there we've got the industry, rightly or wrongly, lobbying for the stamp duty holiday to be continued. I mean, my view is there may be a case for a transition, a short transition, but I'm assuming that even if we stop the stamp duty holiday, the first-time buyer stamp duty treatment would be revived, as it were. That would come back into play. So the market would still have incentives for first-time buyers in there, regardless of the fact that it doesn't any longer apply, for example, to buy-to-let landlords who've been benefiting from the stamp duty holiday. Was that really the policy intention? I personally don't think it was. So I think trying to read 21, it's noticeable in the discussions about products coming in, new market products coming in, they're all caveated by the view that subject to market conditions. Who is going to rush to launch a product in a market characterized by uncertainty? You can clearly understand why these launches have been somewhat delayed. I mean, they've been waiting to launch now for months, but the go moment has been somewhat delayed. And I think you and I would both agree, trying to guess what's going to happen in 21 and the timetable for what will happen in 21 is almost impossible at this stage. We can probably see our way through to end of March 21 as per continuation of where we are now, presumably. Post the stamp duty holiday, post the end of furlough, and all the other things that end, Help to Buy changing. There's a whole load of them that come together in the end of March 21, the big cliff edge. Can we smooth through that, and will the rest of the year look positive or negative? I find it very hard to read.
And I suppose that brings us close to kind of ending
Yes.
the discussion. And given we've just talked about the uncertainty and the difficulty about knowing what to do, given what might lie ahead, your report with Christine, one of the big things it calls for is actually greater clarity from government around what its actual intentions are. So, moving beyond an arbitrary headline about 2 million more homeowners, actually, what's the detail and what's the strategy? I suppose
Yes.
there's the need for that, but there's also the challenge, given everything else that is preoccupying them at the moment, that I wouldn't hold my breath for it, I suppose, is what I'm saying.
No, but you're right. I mean, government can help the market. I think that's one of the key messages from the report, is that government shouldn't imagine it needs to operate in a silo. Much of that thinking that it's doing and data gathering, it tends to internalize it rather than externalize it and help inform the wider world. For investors looking at these markets, they can be encouraged by that information or discouraged by the absence of that information. We think, and I think you would agree, we think trying to get a better sense of these markets, and not least the affordable gap and what might fill it, are really important stimuli to the market as a whole.
Peter, thank you. I think that's a perfect time to end. So thank you very much for your time. It's always a delight to talk to you.